What's up, guys? Welcome back to the channel. Today we have Google's earnings. Let's take a look. These earnings just hit everything out of the park. Google is a growth machine. You're talking about a company that is around 25 years old. Their changes in revenue, 15% growth year over year for the quarter, 76 billion up to 88 billion. Operating income, 21 billion up to 28 billion. So that's a 7 billion increase, 7.2. That is roughly a 33. That's over a 33% increase. That is insane. That should not be. They should not be capable of doing something like that. Operating margin, right? 32%. Okay, so remember that Google is a company that has traffic acquisition costs. They should not have this high of an operating margin. Unlike Microsoft or Apple, they have to pay out a lot of what they get to people. And still, they're managing to increase their margin 4%. That is just, I don't know how they do this. They are just such an efficient company. They just make so much money. They do everything so very well. Okay, come down here, net income 19.6 to 26.3 billion dollars. Like, they increased net income $7 billion in a quarter. This is unheard of. 1.55 to 2.12 diluted EPS. Just I don't have the words for this. Somebody call up Elon Musk. Go visit Elizabeth Holmes, or is that her name, over the Theranos CEO in prison. Somebody get me sure Kelly up on the phone right now, because I need a master. Okay, I need their kind of words right now to express how 10x, moon, Mars, things like that, right? Solved, all this kind of stuff. The hyperbole, I don't have it. I'm trying though. Google search, apparently Google search is dying. No, it's not. Up about 11-12% year over year. YouTube ads 7.9 to 8.9. Again, another bright spot. Google network, this one is going down. This has been one of their struggling points, but you have to understand that this is probably going to go away, especially as we move to AI assistants. A lot of traffic is going to go with these small web developers that show these network ads. Okay, they're going to be going to their AI agents. Their AI agents are going to be doing things for them. So this has been on the board, but the good thing about this is that it's not that big of a deal, because this also has their highest traffic acquisition cost as the Google network. They pay out a significant portion to their partners. Okay, Google subscription platforms and devices, a new very high margin, right, business here you're talking about. As Sundar pointed out, and I did in my deep dive yesterday, we were on the same page. He pointed out YouTube Premium, YouTube TV, NFL Ticket, or NFL Red Zone, the ticket. And then he talked about YouTube Music, how this subscription platform, Google One, is driving. It's just pulling in so much money. There's so much synergy. Louis Rossman, admit you were wrong. Google, they have the best plan with YouTube, and YouTube is not dying. It is absolutely flourishing. Okay, Google Cloud. This exceeded my wildest expectations. 8.41 billion to 11.353 billion. That is an increase of roughly $3 billion on 8.3. So over 33%. They are really accelerated. And this is because they are the AI cloud leader, hands down. Remember that these transformers and all this stuff that we're talking about, and these techniques they were mostly made, they were pioneered by Google, and for so long they were just too cautious with what they were doing, and it's understandable because they received so much criticism. But at least, on the consumer side, where it's just like culture wars and people are like, oh, Google, I hate Google, oh, everything's wrong. And the business side, people don't care. They just want the best product. And Google has that when it comes to AI right now. And we can see how important that is, because look at their cloud services down here. Net income, $1.947 billion. This is just gravy. Remember yesterday where I talked about their cloud, just like Azure, just like AWS, they have internal dog food. They're splitting the cost of their own infrastructure for their own services with building out their cloud. Okay, that is the benefit these companies have. This is why they are so profitable. They're selling off their excess capacity. They're using their own stuff. And I would imagine they probably give their self priority, but they have so much capacity that I suppose priority doesn't matter. But the whole point is they get to sell excess capacity, internal dog food, cloud, $2 billion. I think in 10 years, they could be possibly past Amazon. Don't quote me on that. They're third right now. They are quite a bit behind Amazon. But in 10 years, when AI is going to be the most important thing, they are the leader right now. They could be past Amazon for market share. And if they are, they could be pulling in $10 billion a quarter from the cloud. Just pure gravy. And if we come over here, Main Street data, they will tell you that operating margin 17.1. I was in my deep dive, I was like 11.3. Look at this, how this is accelerating. I was calling this accelerating, and then it jumps to 17.1. Absolutely incredible. And then Sundar on the earnings call talked about what I did yesterday, and he reinforced it. So I gave you great information. You got to watch that video because I talked about this. Their Trillium lineup and their Axion chips, their custom hardware is increasing their efficiency in their own cloud. Okay, because we know that their custom hardware, it might be the best stuff out there. They train Gemini solely on their TPU version 5, V5, V5e, and V4. Okay, and they're training the latest version on the Trillium, which is V6. They didn't use any Blackwells. They didn't use any of the H series from NVIDIA. Okay, now Sundar had to be careful because he didn't want to knock NVIDIA, when he's saying this, because they offer NVIDIA their customers. So they want to be seen as a shop with all solutions. But, the customer's question was, how are these chips driving efficiencies within the data center? And they went into detail on it, and it was just tremendous. It was just great, okay? By Google having Axion, they're going to be reducing their internal costs and their dependence on AMD, on Intel. They're going to be reducing their energy, okay? They're going to have custom chips designed for the kind of workloads they need to run, and then they can take this and they can outsource it to other people with their excess capacity. These chips that perform better than generic chips from AMD or Intel. And they can do that with their TPUs too. Now their TPUs are a little bit harder to use. You do have to know how to program specifically for them. But once you do that, you can get more power out of them than you can out of Blackwell. Okay, so this is the benefit of Google building out this ecosystem. They are technically, in a way, competing with NVIDIA, but in another way, they're not. They would never really try to be a player like NVIDIA. That's just not their space. Okay. But don't be surprised if their TPUs in 5 to 10 years have a good portion of the market. When I say that, I'm not saying they're going to be past NVIDIA or even AMD, but maybe they'll have 10-15% of the general market, which would be just astounding. So anyways, Alphabet, everything, hands over fist, just make money, crushing everything. Main Street data, 17.1% of cloud operating margin. Stock, exactly what I tell you that I hate about Google, right? All this great news, it goes up 5%. It started coming down. I was just like, what? This is impossible. Actually, this isn't 5%, it's like 4%. But then the smart money came in. People were like, no, wait, we can't do what we usually do with Google. We hate them, but this is absolutely gorgeous. These are absolutely fabulous earnings. And so we are up with Google overnight 5.59%. This is just nuts for Google. Google doesn't do this, okay? It'll have moves like this, but it'll always move down the following day. I think this one is here to stay. I think we're here to stay. Google is trading at an extremely low 23.89 price to earnings, okay? They should be up at 36. They could be up at 40, right? They have Waymo coming along. And Waymo. So yesterday I lowballed Waymo and I said, what do we think just lowballing Waymo? 100,000 went from 50,000 to 100,000 in 3 months for rides. They're expanding to Atlanta. They're expanding to Austin. I said I would expect 200,000 rides by June of next year. That's a real low ball. They just announced today 150,000 rides a week. Well over 1 million miles. So you might have said 10 million miles. It was just something astounding. So this is a stock, a company hitting on all cylinders. And I'm just so happy. This isn't an advice to buy. Okay, I just happen to like Google. I'm not a financial advisor. You do your own due diligence. Okay, I'm trying really hard to be a meme stock guy. You see DJT and the moves it's making. I want to get in on it. I would love to learn how to make money and stuff like that. But my brain just doesn't see things that way. But Google is a stock, the kind of stock that I like. Okay, and I'm going to keep buying it because I do think that fundamentals do matter. Okay, I still, there's a weird part of me that believes that when you print cash and you're innovating and you're just making money all over the place, right? That's still a good thing. Okay, even if you're not promising the world. So that's my take on Google. Again, Sundar, if you watched my lecture last night and used it to write your notes today, I'm so happy. Just write down below if that happened, if that's what happened. Okay, take care.